Federal government spends 8.9 trillion naira on subsidy in 10 years. Private investors to finance rehabilitation of NNPC's downstream assets. Presidential task force gives 1 billion naira to states for fight against COVID-19. Plus oil rises as U.S. storm eases. This is Business Express on the network service of the Nigerian Television Authority, the NTA, and we are reaching you from Abuja, the nation's capital. I am Liakatun Babatunde. The Petroleum Products Pricing Regulatory Agency (PPPRA) says the federal government has spent a total of 8.94 trillion naira on oil subsidy between 2006 and 2015. The agency, in a document released in Abuja, said the subsidy was paid to oil marketers and the Nigerian National Petroleum Corporation (NNPC) in the period under review. A breakdown of the money indicates that in 2006, a total of 257.36 billion naira was paid. In 2007, 271.51 billion naira was paid, while in 2008, 630.57 billion naira was paid to marketers. All marketers in 2009 were paid 409.31 billion naira and 667.08 billion naira in 2010. The document further revealed that in the year 2011, the federal government paid over 2 trillion naira, marking an increase of 1.4 trillion naira from 2010 payments, and in 2012, 1.35 trillion naira was paid as subsidy. The agency noted that the NNPC since 2016 had been the sole importer of the product to the country. Vice President Yemi Osinbajo has again affirmed the position of the federal government that it has no business running oil refineries in Nigeria. Speaking at a virtual meeting organized for the All Progressives Congress APC social media bloggers and influencers at the ruling party secretariat in Abuja on Monday, the vice president indicated that the Nigerian government sees the private sector as playing a bigger role in investing in and running oil refineries moving forward, while arguing that the challenges confronting the government-owned refineries will persist if left in the hands of government. He said government will continue to explore cheaper gas resources as alternative. The vice president expressed confidence that the energy crisis in the country will ease by the first quarter of 2021, when most of the modular refineries would have come on stream. The Presidential Task Force (PTF) on COVID-19 Monday said 34 states across the country had received 1 billion naira each from the federal government to support the fight against the coronavirus pandemic, explaining that the federal government has laid out procedures in how such funds should be spent. Secretary to the Government of the Federation and Chairman of the Presidential Task Force, Boss Mustapha, who gave the information on Monday in Abuja at the Presidential Task Force briefing, also informed that the federal government had earlier supported Lagos and Kano states with 10 billion and 5 billion naira.
That we're under testing. There's no doubt about it. If only 12 states are reporting, we'll continue to appeal to the subnationals because it is their primary responsibility to provide for the welfare and the care for their people. We've done everything that we need to do from the federal level. The president has graciously approved for 32 states, or 34 states, you can say 1 billion naira each, in the federal budget to help with their response to COVID-19. So I don't think any state can complain about lack of logistics now.
Meanwhile, latest figures from the Central Bank of Nigeria show that Nigeria's foreign reserves rose by $140.9 million by September 17. The reserves rose from $35.67 billion as of September 1 to $35.81 billion on September 17. The reserves had risen by $65 million from $35.59 billion as of August 20 to $35.66 billion on August 27. Now, the Monetary Policy Committee, MPC, has been meeting in Abuja, the nation's capital. Now, the meeting, which began yesterday, is expected to round up in some hours, where the governor of the central bank, Godwin Emefiele, will afterwards brief on the outcomes arrived at by members. The NTA will be beaming that session live, but before then, let's step back to the last meeting, which held in July. Members of the committee voted to maintain stance as a majority 8 aligned against 2. Paul Alaji of SPM Professionals will be sharing perspectives to scenarios that would likely inform decisions by members of the MPC on how their decisions would shape the economy in the coming months. Now, before we go to Paul Alaji, I understand he's having some technical issues at his end. We'll be looking at what the federal government is saying about the 75 billion naira survival intervention funds for MSMEs, which opened 10 p.m. this Monday. The conditional grant under the Economic Sustainability Plan, designed to support vulnerable micro, small and medium enterprises, targets 35,000 individuals per state, with the aim of mitigating the effects of COVID-19. The payroll support programs is with emphasis on small business owners at the grassroots.
Government is very much aware that a lot of micro, small and medium enterprises have suffered. Some have had to lay off workers. Some have had challenges with getting their raw materials, with movement. So this is supposed to be kind of palliative to ensure that they continue with their production and that we minimize the job losses. So the payroll will support MSMEs that have between a minimum of 3 to a maximum of 50 employees, but will only be able to provide support to a maximum of 10. And this support will be in the form of payroll support for 3 months, between 30,000 and 50,000 naira, depending on what the employee is earning in that organization. So we're working with unions because when we look at MSMEs, it cuts across all sectors, those in production, those in hospitality, the media, private education providers, and so on and so forth. And then, of course, we have on the other side the guaranteed off-take scheme, whereby we've identified 9 priority items that we think are being produced in most states, and we will sort of place an order and purchase these items, like the hand sanitizers, the masks, disinfectants, and so on and so forth, and then put them back. In this way, we're able to keep some of these MSMEs in production, and hoping that this pandemic will soon be over. But what is important, as I said, we're working with the trade unions, with the associations, and so on and so forth, to make sure that members of their unions also partake in our discussions. For example, we have a representative of the National Association of Small and Medium Enterprises as part of our committee. So the second component, we're marking, already approved 15 billion naira. But another important component is we're trying to get the challenge that MSMEs have. Most of them stay informal. They don't register, and once they are not able to cross into the formal sector, then the chances are that the business will dwindle or close. So with the collaboration of the Corporate Affairs Commission, we're aiming at registering about 250,000 MSMEs. But for those that are MSMEs, actually businesses, for those that are MSMEs, we're going to register them for free. But for those that are not MSMEs, we've gotten a discount from the CAC. Actually, government is taking up the difference to register at the sum of 6,000 naira, which is about 50% below the normal rate that the CAC charges. So by and large, we are aiming at, by the end of this, these two packages, targeting at least 1.7 million entities and individuals across the country. But since the country is not entirely homogeneous, we've taken out Lagos, Kano, and Abia states for the obvious reasons that you have a lot of MSMEs, you have a lot of production that are contributing to the GDP. So we're giving them special, I won't call them quotas, but special consideration because of the numbers. And then the states would, by and large, have approximately 30,000 to 40,000, as much as we can take. Last but not the least is to say that we're very pleased that Mr. President approved that 45% of female-owned businesses will benefit from this scheme, and then another 5% for those with special needs.
Okay, now we have Mr. Paul Alaje. He's joining us via telephone. Mr. Paul, good morning.
Good morning, and thank you for having me.
Yeah, nice to hear from you once more.
Thank you so much for having me.
Okay, now rising inflation figures was one of the reasons for adopting the wait-and-see approach by the MPC in the last meeting. Now, this index doesn't seem to be shifting at all. So how will you tell us, 13% inflation, what role do you see it playing this time around as we await the MPC conclusion?
MPC, we have to make very tough decisions. There are a lot of variables. Variables are changing and some are static. One of the variables that have changed is the growth rate, that is GDP growth rate. As we speak, we have minus 6.1%. The goal of any committee, particularly Monetary Policy Committee of Nigeria, will be how to support growth. And to support growth, what it will mean is that MPC may want to keep rate the same or to further reduce rate. When you reduce rate, it's going to adjust a number of factors. One of the factors you reduce is inflation may go higher, and because you want to support growth. So you may want to sit on the bench by not adjusting rate. But there are other factors. According to National Bureau of Statistics, investment we attracted in previous quarter, just before the last, was over $4 billion. What we attracted in the last quarter, according to National Bureau of Statistics, was a bit above $1 billion. So to increase rate, we mean we are going to have more portfolio investors, which has been the highest in recent history to Nigeria. But for, of course, no thanks to the pandemic, coronavirus, that changed most of the variables. So for me, what I am saying MPC will do is to take among these two decisions. One would be to increase rate, which will be very dangerous now that we have minus 6.1% GDP growth rate. It will be nice if that could be done, but it will be dangerous for the entire economy. The second thing would be to remain the same. To leave rate the same with me, we will watch again for the next 2 months to see how economy will be affected. And I can tell you, this perhaps will be the decision that NPC will come up with to sit on the fence, because if you increase rates, the growth rate may further worsen. And if growth rate worsen, it's also going to come back and have effect on the inflation that you are trying to protect. So for now, we have so many variables that are not settled, one of which is inflation, currently 13.22%, growth rate 6.1%, and of course, investment, how much Nigeria is attracting investment. So what I've seen government, what good decision government has made, even from the last interview you just played, has been government is coming, firing on all cylinders to support small businesses who, of course, can salvage inflation and support employment, because most people are now having issues with supply, with capital import, and so on and so forth. So if Monetary Policy Committee will leave it the way it is and not necessarily increase it, which is the only other option we are faced with, we will
would be your take on forex availability and liquidity versus this rising food prices? Of course, we also have to take into consideration the flood.
It's a big worry. I can tell you, as one of the players in rice milling, I can tell you it's a big worry, particularly for some of us who wants to bring in capital equipment such as rice parboiler, rice dryer, to support the continuous increase in rice, particularly. I can tell you, paddy, because so much people now need paddy, and paddy is not so much available. FX to bring to support equipment is also not available. Maize, we are faced with the same challenge, and so on and so forth. Natural disaster, particularly flood that just happened and did away with so much of what we have in Kebbi State. I can tell you that monetary authority, we need to change strategy, particularly as it affects availability of FX. I know that last week, and then central bank has reported that it made gains from FX. It has excess, I beg your pardon, of over 30 million US dollars. I think we should start now by considering those who wants to do genuine business. And CBN has put in place some good policies that will help us to know those who are practicing over invoicing as well as overpricing. And I think that mechanism should be in place, should be activated immediately, so that we don't further wait to see further prices, because people will be forced to go to the parallel market. And when they go to the parallel market, it's going to affect our exchange rate at the end of the day by saying they should source it from other sources. I am of the opinion that my monetary policy committee should also encourage central bank this time, and I'm happy the central bank itself is the head of monetary policy committee, should look at those who want to bring critical raw material that we don't have in the country. Again, people that are importing machineries into the country. That is how, and I think the only way we can meaningfully increase employment and also combat inflation. If we don't make this available and we are still sitting on fence, not taking decision on time, the matter that we have in our hand is still manageable. But if we don't take decision on time, I'm afraid it might get worse.
Okay, now the central bank also, from the start of this coronavirus pandemic, embarked on many credit interventions. How do you see this shaping decisions, considering the funds that have been injected into various sectors of the economy by the CBN?
To a large extent, I think if central bank had not injected funds, the economy would have been in worse shape. It would have been a worse situation than we have it right now. But because of that intervention, prompt intervention by central bank, I think that is why we have minus 6.1%. South Africa had over minus 50%. Even though South Africa has been in recession even before the pandemic. And many countries in the world are faced with worst case scenario, worst case that we have in Nigeria. So the intervention is good. I also think central bank can do more. I'm happy Ministry of Trade and Investment is also coming up with about 70+ billion of naira to support small businesses. And I also want many other ministries who should also support government. Like, for instance, NDC will not be bad if we decide to support those that they are regulating, and so many other government agencies. This is the way we can keep private sector going. What we need today is to keep private sector going, because if private sector is down, it's going to have tremendous impact on us. Good news, government seems to have reduced pressure on naira and on FX for subsidy on petrol. So government is saying no to subsidy. The impact of this should be felt directly. It should be felt in terms of availability of FX that would have been used to subsidize. It should also be felt on government revenue that would have been used to pay subsidy either back to NNPC or those importing petroleum to Nigeria.
Okay, thank you, Mr. Paul. Time is not our friend, so can I just take this one last one, and you're going to give me a yes or no answer. Do you see the CBN maintaining its position, the MPC now? Do you see it maintaining the key rates? Yes or no?
Yes, that's the part of wisdom. To maintain it is the part of wisdom.
Thank you very much.
I think they should remain the same.
Okay, thank you. We've been speaking with Paul Alaje of SPM Professionals. Now, moving on, investors gained 929.41 million naira as NSE All-Share Index inched up marginally by 0.01% to open this Monday positive. The NSE All-Share Index appreciated to close at 25,574.34 basis points against the addition of 0.16% recorded in the last session. Of course, trading has resumed this morning, but on a very, very slow start. Market breadth closed yesterday and resumed this morning in the negative, with turnover still looking positive. Airline stocks in Asia Pacific tumbled in Tuesday trade as coronavirus fear returned, with major stock markets also seeing declines. Details with Muplang Dakok.
In Asia tumbled in Tuesday trade as coronavirus fears returned. In Hong Kong, shares of China's Eastern Airlines dropped 1.98%, while China's Southern Airlines fell 2.86%. The Hang Seng Index in Hong Kong slipped 0.86%. Shanghai Composite Index of China went down 1.14%, while Japan's Nikkei 225 inched up 0.18%. European stocks pointed higher Tuesday morning, bouncing back from Monday's losses on coronavirus concerns and bank allegations. London's FTSE is opening 30 points higher at 5,826. Germany's DAX and CAC 40 of France also inched up. Stock futures in the US were lower in early morning trading on Tuesday, turning negative after a positive start earlier. Futures on Dow Jones fell into negative territory as they lost 78 points. The S&P 500 futures and the Nasdaq 100 futures, which were both in positive territory earlier, also fell into negative territory.
A resurgent dollar held on to overnight gains on Tuesday after virus fears and worries about U.S. stimulus drove a wave of selling in just about everything else. Oil rose in early trade on Tuesday, parrying sharp overnight losses as the latest tropical storm in the Gulf of Mexico lost strength. But worries about fuel demand persisted, with flare-ups around the globe in coronavirus cases. U.S. West Texas Intermediate crude futures for October, due to expire on Tuesday, rose 26 cents to $39.57 a barrel. Brent crude futures rose 13 cents to $41.57 a barrel. Now let's see how the commodity market is faring. And this is where we end this episode of the program. Don't forget, you can access these and all previous episodes on YouTube, and you can also communicate with us on Twitter. The handle is NTA News, and now the hashtag, don't forget to use it. It is BizX. Business Express returns tomorrow at 3 p.m. Remember to wash your hands and stay safe out there. My name is Leah Katung. Baba Tunde.